In today's video, we are going to take a look at the stock market, specifically the S&P 500. As you probably know, there's a big correlation between Bitcoin and the stock market, which is why it's important to pay attention to the stock market and the macro, because in general, what we've been seeing is when the stock market goes up, Bitcoin goes up, and crypto goes up as a result. And obviously the inverse, vice versa. If the stock market goes down, crypto tends to go down too. So I'm going to show you a couple of things in today's video why there is potential for a larger rally in the stock market, which could also then be good for Bitcoin and crypto. So let's dive straight into it. If you are new to the channel, welcome. If you are existing to the channel, welcome to you too. Subscribe down below. If you haven't done that yet, click that subscribe button, click the notification bell so you do get future updates. Also, I really appreciate it if you could smash the like button because it does help this video get out to more people. And if you want to get on my email list, it is the first link in the description down below. Then I can send you an email every time I upload a new video. Okay, so let's dive straight into this. This is the S&P 500. This is a 3-day chart. We have the 50 simple moving average in blue, the 200 simple moving average in red. And as you can see here, there is a pattern that has been developing over the last basically 14 years. Okay, so we are looking all the way back to 2008. This was the big financial crisis over here, which, you know, in hindsight doesn't actually look that big. So what is interesting to note here and what these arrows represent is what I've noticed here on the chart is the price action once it goes below the 200 moving average on the 3-day chart and it gets back above. So after the point that it's been below it and it crosses back up, what ensues, what follows after that point, and it is usually a rally every time. Look at this. Okay, we went below the 200. The point where it crossed back above it, look at the rally that followed. Same thing here. It went below it. After it crossed back up, that's where the arrow points to. Look at what follows. Same thing here. Drop below it. We can even zoom in here a little bit to get you a better picture. You can see after it broke back below it and then it went back above. At that point, look at the rally that followed. Same thing here. This was obviously the March 2020 sell-off. It broke down. It sold off below it. But at the point where it crossed back above that 3-day moving average and it reclaimed that, look at the rally that followed. Okay, every single time. What happened? It broke below it when it reclaimed it. At that point, you know, a long position, this is obviously in retrospect, a long position after it reclaimed it would have resulted in a big rally and big gains. So the interesting thing now is we had that break below it and we have reclaimed that 3-day 200 moving average. Okay, so this is very, very interesting to see. Again, it's not a guaranteed thing, but you know, when we look at charts and we look at data and we look at patterns, when it happens over and over and over again, statistically, you know, the probabilities become a lot higher that when that pattern has successfully played out so many times in a row, that when it happens again, what is the chance that it's going to happen again? It's not a guaranteed thing, but it is starting to look very, very interesting, right? I'm going to show you a couple more charts and a couple more pieces of data that help basically back up potentially that we could indeed be seeing a repeat of this pattern with a lot more upside to go in the stock market, which means if the stock market does continue going a lot higher and we do get a multi-month or maybe even a multi-year rally from this point, that could end up being very good for Bitcoin and as a result for altcoins, which are basically tied to Bitcoin. And if that all goes up, obviously for anyone who's positioned long, that is going to be very, very good. So I want to show you 3 charts. All of them are from Game of Trades. You can follow them on Twitter if you want. The link will be down below in the description. You can see over here the aggregated US equity futures positions as a percentage of open interest. So basically, open interest in the futures market is positioned for massive downside. So what this means is a lot of people are betting on short side continuation, downside continuation, meaning that if too many people are betting on a single direction, usually what tends to happen in markets is the opposite tends to happen, especially if those people are positioned with leverage. Then, you know, they can get liquidated, they can be caught offsides, even with cash levels sitting on the sidelines waiting for more of a crash for the markets to go down further. You know, if the market starts going up, that sideline cash is losing out. And then if that rally is continued, as the pump continues, basically that sideline money is going to start FOMOing in, fueling the rally even more and giving even more fuel to the rally to continue it even higher. Here's another chart, the S&P 500 corporate insider buy-sell ratio. And again, going back all the way to 2012, you can see over here this level, and it's marked here on the chart with these yellow arrows. Look at this point where it hit the green line over here at the top. Look at the point in the price action and what happened afterwards every single time. We had a rally, even though we did get that massive sell-off in March 2020. First, at the point where it happened, we did get the rally. And here again, we got that massive rally. And we are at that point again, based on the data, again, it's not a guarantee, but what has happened every single time in the past so far, a big rally has ensued. Here's another chart called the Smart Money Confidence 100 period moving average, basically saying the big guys are loading up. Smart Money Confidence has just entered historically high territory. And you can see again, going back all the way to 2002, look what happened when it hit these levels. We got a big rally. Here, that was maybe a bit of an exception. Over here, we got a bit of a sideways, and that was 2008. That didn't really lead to too much. This one led to massive rally. So again, this one, maybe, 1 out of 3 didn't lead to a big rally. So there's not a lot of data points here, but there is potential here. So again, these are just 3 charts over there. Then I want to show you this chart again that I've shared with you before, which is the midterm election average stock market performance. You can see the average performance for all years based on seasonality, based on the months, how it tends to perform versus midterm election years, which is mostly choppy to sideways until the end of September, October, when it bottoms, and then a massive rally for the elections that happen in Q4, which are set to happen in November of this year. So far the market has been down to choppy pretty much. You can see you get a little bit of an uptick in August over here, so that's what we could be looking at. But then we still have that potential late September, early October shakeout scenario. And finally, another thing that is positive for the short term maybe is that we just had the FOMC decision. Now with the Fed raised interest rates by 75 basis points, and in August there is no FOMC decision. The next one is only in September. So that gives us a window of almost 2 months for the stock market to potentially rally based on all this data that I've shown you, the 3-day reclaim, the data from the charts that I've just shown you, the seasonality for a bit of an uptick in August. So we might see a bit of a continuation here for the next few weeks. Now the question is going to be, what is going to happen in September, especially towards the end of September? We have the FOMC decision, right? And September tends to be a shakeout month, a very volatile month. So are we going to see another sell-off and a continuation in September? Or is this time going to be different? And was this it? Was this our entire correction from about November, December last year? We corrected all this way down, and do we continue going up from here? This is going to be something to watch. I think what we have to watch out for now is, do we continue to stay above this 3-day 200 moving average? If we drop back below it once again, then there is more threat of downside continuation. As long as we're staying above that and we have reclaimed that, there might be potential of a much larger rally in the stock market, and as a result in Bitcoin and cryptocurrencies. So what do you think is going to happen? I would love to know. Leave a comment down below. Share your thoughts. Are we at the start of maybe a massive continued rally, or is this another bull trap that's just going to roll over and going to end up going a lot lower, especially in September or October? Would love to hear your thoughts, so please do leave a comment, smash the like button, subscribe to the channel if you haven't done so already, and I will see you in the next video.